Hello traders, my name is Chris Weston, Head of Research here at Pepperstone, and certainly one of the key talking points has been the weakness we've been seeing in the Australian ASX financial sector, and I don't think that's necessarily going to surprise given the headwinds we've been seeing from the Royal Banking Commission, where measuring and modelling reputational risk is one of the hardest things for analysts to do. The impact on future cash flows and future earnings is very difficult to model, and therefore to derive a net present value is an extremely tough exercise. So there's been a few uncertainties around that and what would be the genuine impact to the bottom line. But I think that probably the big one now, which is the single most important data point for me in the Australian market, is the auction clearance rates. I think they're the most forward-looking indicator, and things like retail sales, consumer confidence, and finally GDP will really be driven by that. If you have a look at the Melbourne auction clearance rates, they've fallen 21 percentage points, in Sydney 17 percentage points over the last 12 months. If you have a look on a national basis and take a more broad measure here, we've seen that falling to around 50% from a high of around 80% some time ago. But certainly that's the weakest levels we've seen on a national basis since 2012. And certainly the media is doing a good job of projecting fear and potential drawdowns of, say, anywhere between 15 to 40% in house prices. Volumes of houses sold have dropped 40% over the past 12 months. Of course, that's going to have an economic impact. The government will receive less in the way of stamp duty, and so therefore, lower revenues from there, and they'll have to make the shortfall up for their budget. We're going to have to see a situation where property prices are falling. We've seen that in the Sydney Property Price Index down 6.6% from the highs. You've seen Melbourne property prices coming through as well, falling across the board there. So certainly weakness there, and that will manifest on itself. You've seen that 12.5% drop in the financial sector, which, as you can see, has a very, very strong correlation now, a reasonably strong correlation with the auction clearance rate. So if auction clearance rates continue to deteriorate, people are staying away from buying. If banks are not giving that credit for people need for auctions, then they will stay at this kind of this boom bust level of 50%, which will manifest on itself and scare people away from buying property. People will have to meet the market, and of course that's when property prices do fall. And as we've seen, ASX is getting hit pretty hard on the back of these auctions rates. Now, there will be a real wealth effect in the Australian economy, not just because people's share portfolios are falling. Most people hold bank stocks in their portfolio either as a market weight or an overweight. Okay, you can adjust it for a total return basis and see things in a slightly more optimistic pattern, but people are feeling the pinch from those bank shares starting to hit now. Now, if you add in the real wealth effect from asset prices falling, from house prices falling, which will continue to happen, I think the path of least resistance is for housing to fall. I'm not calling a doomsday scenario by any means. I don't sit in the camp we're going to see 40% prices, and of course, it depends where you are in terms of the house prices. But I think the path of least resistance is for a moderate gradual decline in prices, and that will impact people's psyche, and therefore you are going to see a hit to retail spending. You are going to see a hit to discretionary spending and consumer confidence. Cash savings levels will probably increase as a result, and therefore you've got the impact to the government wealth and also to the household situation. So I think the market will price in rate cuts coming through. I think the ultimate situation is how the RBA deal with this. At the moment, they're still fairly optimistic about rates going forward. They still think rates are going up as their next path of projection. But as soon as they give a more nuanced statement, as soon as they start seeing two-way risks coming through, the market will price in rate cuts, and the Australian dollar will respond. In terms of Australian bank stocks, well, they're obviously going to continue following what's happening in the auction clearance rates. But I think the RBA is the circuit breaker here, and if they do come out with a more nuanced, more dovish stance, then I think the interest rate markets will price in rate cuts. At the moment, they're still pricing a moderate degree of tightening over the next 12 months or so. And I think the trade for me is continuing to sell Aussie dollar into strength. I like to sell that into around 71.80, which is the one standard deviation from the longer term line of best fit from the January downtrend. I think that's probably where supply will come back into the market, and you're just looking for a few shorts to cover there. But probably the other way of playing this is through Aussie Kiwi. You're marrying up two fairly similar economies, And I think the move through the September downtrend, uptrend, has probably caught a few people there, and I think that's somewhat bearish. I think a daily close through those levels would be a signal in itself. But then I think the really big one comes if we can get through the bottom of the consolidation range of 108.35, a close through that level, whether it's today or whether it's in the days ahead, I think open up's good downside. I'd be putting stops on a close above the 5-day exponential moving average, which should, if this does start trending, define the move lower. I won't have a target on this because I just want to see how this plays out. But I think this is a brilliant macro trade based on the idea that we are seeing a deterioration in the Aussie housing markets. You've still got some degree of rate cuts in New Zealand, and they've just had a pretty good CPI number there, which I don't think warrants rate cuts at this time. But certainly I think this is a fundamental and technical trade that people can look on their radar at the moment.